Do we agree with Michael Saylor that ultimately this category, Bitcoin and other crypto assets, could be bigger than SPY? Yes, we do. Absolutely, we do. And Bitcoin alone is going to be the biggest part of the entire crypto asset ecosystem. Our expectation out in 2030 that it will be a $20 trillion, it will be worth $20 trillion.
$600 million flowing into BlackRock yesterday, $10 billion in a month. If you look at the ETFs, what you'll see is that the Bitcoin ETFs are crawling up past all the commodities. They're about to eat the gold ETFs, and then they're going to eat the S&P 500 index ETF. Bitcoin is going to outperform the S&P and gold and bonds.
Gold and Bitcoin both reaching record levels.
Bitcoin is certainly at least digital gold. It's going to eat gold.
Bitcoin is become Wall Street's favorite asset.
During his keynote speech at Bitcoin Atlantis in Madeira, Michael Saylor made the bold claim that the Bitcoin ETFs would soon overtake the SPY ETFs, which are a wrapper for the S&P 500 index. The SPY ETF currently has a market cap of nearly $500 billion. It's taken the SPY about 30 years to reach where it is. But Michael Saylor predicted that the newly launched Bitcoin ETFs will not only reach this level, but soon overtake it. During an interview with the New Zealand Herald, CEO of ARK Invest Cathie Wood commented on the claim, and she is in agreement with Saylor. During this interview, she also discusses the impact of the halving and her price target for Bitcoin in the coming years. Let's listen to Saylor's bold claim and Cathie's comments.
$600 million flowing into BlackRock yesterday, $10 billion in a month. If you look at the ETFs, what you'll see is that the Bitcoin ETFs are crawling up past all the commodities. They're about to eat the gold ETFs, and then they're going to eat the S&P 500 index ETF. Bitcoin is going to outperform the S&P and gold and bonds.
Now let's hear from Cathie.
Do we agree with Michael Saylor that ultimately this category, Bitcoin and other crypto assets, could be bigger than SPY? Yes, we do. Absolutely, we do. And Bitcoin alone is going to be the biggest part of the entire crypto asset ecosystem. Our expectation out in 2030 that it will be a $20 trillion, it will be worth $20 trillion. Now, how much will ETFs get of that $20 trillion? I don't know, but that already right there, it runs circles around SPY, number one, and I believe all of public equities globally, no matter what wrapper they're in, are valued right now at roughly $120 trillion. So when I say 20 trillion by 2030, that's a very big category. All of the ETFs out there right now hold about 3.9%, roughly 4% as of today, of all the Bitcoin outstanding. Now, the really interesting thing about that is if you look at on-chain analytics, which our analyst David Puel does for us, you'll see that long-term holders account for, I believe, 15 million of the Bitcoin outstanding, roughly 15 million. Total outstanding right now is 19.5 million, and the total that will ever be outstanding is 21 million. Those long-term holders are not selling. That's what's going on with the price right now. And the flows into the ETFs which have taken the friction out of buying Bitcoin and which can be used as collateral for loans, whereas Bitcoin itself cannot, suggest to us that added 1.5 million to go in Bitcoin is going to have to cover a lot of investors, institutions, and so forth. In other words, the price will have to go high enough to wrest the supply, some of the supply, out of long-term holder hands. The odds that they will move their Bitcoin go down dramatically unless the price spikes dramatically.
In agreement with Saylor, Cathie has explained that not only does she expect the Bitcoin ETFs to overtake the SPY, she predicts that Bitcoin will represent a whopping 17% of all assets in the world. This extremely bullish price prediction has been paired with an in-depth analysis of why. Cathie has explained that the ETFs have created a new demand imbalance in the Bitcoin situation, and now the halving is going to create a supply imbalance. Couple this with the number of long-term holders who will not sell their Bitcoin. Cathie expects that Bitcoin's price skyrockets in the coming months. Let's head back in as she further discusses the impact of the halving.
How is the price impact of this year's halving perhaps going to be different this time around because of that landscape that you've just explained?
Yes, so we'll go from roughly 1.9% growth in Bitcoin supply per year down to 0.9%. So we will drop below 1% for the first time. And if you look at the long-term history of gold, what you'll find is the average supply growth has been roughly 1%. So now Bitcoin supply growth is dropping below the supply growth of gold. That is a milestone, I would say. And the other difference here is when the gold price spikes, there's usually a mining response and the supply spikes with it. That cannot happen with Bitcoin, so it's quite a different dynamic. So the halving is that milestone, and if you look historically after halving, it's usually been very good for the Bitcoin price. Now, it doesn't happen right away. I don't know why it doesn't happen right away, but it doesn't. Now that the market's becoming more efficient with ETFs, it might, because think about how many people even know about the halving this time around. They didn't even know what Bitcoin was. The financial markets, when you've got the entire ETF infrastructure out there ready to arbitrage these sorts of events, we may pull forward the price increase and accelerate the transition you're talking about.
The upcoming halving will drop the daily supply of Bitcoin from 900 to 450, and the total amount of Bitcoin that will ever be mined is now about 1 million. Cathie expects that as institutional investment grows, there will be a struggle for the remaining Bitcoin. She explains that these institutions will have to wrestle with long-term holders to obtain more Bitcoin. She expects that this struggle will only drive prices higher. Sit back as we bring you more clips from the interview.
Your price target for Bitcoin is bull case north of $1 million US, which I do know depends on institutions allocating some of their funds towards it as an asset class. But many still haven't. Vanguard is actually categorically refusing to at the moment. How much of that institutional mindset shift still needs to happen? And what does it ultimately mean for your price target?
Well, I think something very important happened last year. In March of 23, regional bank crisis here in the United States. Regional banks imploded, some went bankrupt, and Bitcoin exploded. It went from 19,000 to more than 40,000. What did that demonstrate? That demonstrated that Bitcoin does not have counterparty risk like banks do. And so it became a risk-off asset. Before, we had just thought of it as a risk-on asset. When liquidity is flowing, Bitcoin will be one of the prime beneficiaries. But this idea that it is also a risk asset, and as we hope we've shown in our own new asset class paper, white paper, its correlation with other assets is so low that institutions have a fiduciary responsibility from an asset allocation point of view to at least look at it. And if they want to dismiss it, fine. Vanguard did. But what we think that Vanguard is doing is, well, one of two things. Vanguard has never invested in commodities, so it's just treating this like a commodity. For the most part, it hasn't. If there continues to be low correlation of returns, what will happen is those using it will see increased returns per unit of risk, and they will outcompete the Vanguard advisors. So I think there will become, even for the Vanguard ecosystem, a demand pull.
If we can just forget Vanguard for a second, discount them.
Cathie Wood has explained why further institutional adoption of Bitcoin is inevitable. Since the launch of the ETFs, there's been regulatory clarity on the nature of Bitcoin, and the conclusion is that it's now an asset class, precisely a commodity. Vanguard has a history of not dealing with commodities, but Cathie has explained that this changes nothing as other banks and financial managers who adopt Bitcoin will outperform the Vanguard advisors, leading to industry-wide pressure to allocate towards these ETFs. While trying to remain tight-lipped on the matter, Cathie expects that Bitcoin will go as high as $1 million USD per coin in the coming years. What do you think about Saylor and Cathie Wood's bullish price predictions? To see the latest in crypto news, watch this video here.